Hello guys, it's Max here from Daily Market Movements, and in front of me is the gold over the US dollar charts. As you can see today on Tuesday, we are trading in a red ever so slightly, currently at 1886. Pretty much the standard procedure of what we've been seeing on a daily basis here in the gold markets for the past month and a half, and that's just we've just been consolidating around that 50-day EMA, and especially within that blue rectangle that I've drawn on the charts. Not much has really happened in the past month and a half, and I don't expect much to happen for the rest of the week really. You might have heard me explain in yesterday's video that for gold to go back towards all-time highs, so it's back above 2000, trading up towards 2100, we need a second stimulus deal. We need a catalyst to push us that higher, and the second stimulus deal is the obvious catalyst to put us back into that rally mode so that we can then achieve the all-time highs here in the gold markets. But until we get that second stimulus deal, or there may be another catalyst out there which may occur, which may send the gold markets back to all-time highs. But until we get that, I just pretty much see us trading in between this range of this blue rectangle, which is between that, at 1935 area, all the way down toward that 1860. 1860 is a level which has been very well supported by the bulls in this market. We've struggled really to break below that 1860 to 1850 area, and then likewise on the upside, we've struggled to break above that 1935 area. So this is an area where I think that we will continue to trade within the next couple of days or weeks. So patience is the key. If you're looking to trade gold on the short term, then definitely look to be buying down at 1860 and targeting towards 1930. That's how you play this market in the short term picture in this range here, because that's what we've been trading range bound for the past month or so. But if you're more of a medium term to long-term investor here for the gold markets, as I mentioned before, you want to wait for that second stimulus deal, which may happen come next month or maybe January, which will then eventually break us out of this blue consolidation phase that we've been trading in for the past month or so, and trading back towards all-time highs. If you are a bull as well for gold markets, I would be looking for a break above the 50-day EMA. It's very important that we do get a daily close above the 50-day EMA. From a technical perspective, that would be very bullish. But that's how I'm playing the market. So going into tomorrow, just looking for some more range-bound trading within this blue rectangle. Nothing special going in towards going into Wednesday's session. So, but I am still bullish. Long term. The medium to long term, I am still very bullish on the gold markets. The fundamentals have never looked better. We are in a low interest rate environment. We still have a global pandemic, which has caused, many countries to put their citizens in lockdown, like in the UK here, for example. We're currently in lockdown. There's still tensions between the US and China. There's still tensions between Donald Trump and Joe Biden. There's many uncertainties out there which are, causing the gold markets to trade at such high levels and potentially even higher. So from a fundamental perspective, as I mentioned before, we have never looked better. And also from a technical perspective, we're looking very healthy as well. We're in a new bull market. And we're trading just below all-time highs. We just need to recapture that 50-day EMA. But for that reason, I'm a buyer, no interest in selling. And, going into tomorrow's market on Wednesday, I'm just looking for gold market to hopefully trade back above the 50-day EMA. But I don't expect us to break out of this blue consolidation phase. you.